Good morning, everyone. Hi, this is Bernard with Insurance Advisors Direct, and Happy New Year to everyone. And to kick off our webinar series, today we have Planning for Long-Term Care, What You Need to Know. And with us, we have one of our strategic partners, and actually we have another strategic partner joining in a little later. So first we have Chris Schieffer. And I say a big help to Insurance Advisors Direct on the life side. He's a life guru, and you're going to enjoy the presentation that he is going to give for us today. Just a quick housekeeping. If you have any questions, I will be glad to answer them at the end of the presentation. Just type them in, and we'll go from there. So without further ado, Chris Schieffer, my friend, take it away.
Well, good morning, everybody, and thanks for being here with us. First, what I'd like to do is make sure that everybody understands today's presentation really is for educational purposes, okay? Not trying to solicit any sort of products or anything from you. Simply trying to give you a strong understanding of what the options are when talking long-term care, okay? And you might be surprised to understand or to see that there's more than just traditional long-term care to look to. And truth be told, the majority of long-term care stuff today that gets done is outside of the traditional long-term care space, okay? But with that being said, let's go ahead and let's talk about long-term care a little bit, okay? I'm not the best at technology, so if I accidentally skip two slides or something and come back, please deal with me. But when discussing long-term care, it's important to start with the basics, right? You want to make sure to expand your knowledge from there. So one thing that you really need to understand is when it comes to licensing. Those of you on this call obviously have an interest when it comes to long-term care and seeing how you could fit that into your practice. Make sure that you got the correct licensing for that. Some companies are going to require that you have the state long-term care certificate. Some of the products don't require that. I always tell people, just get that basic knowledge, do that. It'll take you a few hours online, and you'll be able to write all types of long-term care products that are out there. So when you look at this today, right, we're going to begin with discussing what's meant by long-term care. We'll speak about why the potential need for long-term care should be included as part of your client's retirement strategy. We're going to touch on the various options that you have available to you for care providers, and finally we'll discuss some of the options to help address what the cost of long-term care is. Now, I know we're not sitting here in front of one another, and before COVID, I generally would do everything face-to-face. I traveled around, I sat, and I would give these to rooms of advisors, and I'd help advisors out with their prospects and clients and at their seminars and things like that, right? And I would ask them this question. And I want all of you to think about this, and in the chat box, if you can, feel free to go ahead and type something in there if you want. But has anybody here today, right? Have you had a family member or friend that's needed long-term care? Are you currently a caregiver to someone? Have you thought about potentially needing to be a caregiver for a spouse, a relative, a friend, your mom, your dad? All that said, if you've thought about that, have you even put together a written plan for what you want to happen for yourself and or your family if these needs were to arise? The reason I ask that is if you haven't, you should think about it. You should think about it, and you should understand what the potential pitfalls are, what the costs are, what the issues that could arise could be. Because when you do that, that'll help you understand what the feelings are for the clients that you're talking to. Now, my understanding is a lot of you work with Medicare, right? Now, I think a lot of those people then that you're sitting with are like 64 turning 65, right? Or much older. I'm here to tell you that anybody that's 65 today, two out of three people that are 65 today will have a long-term care stay. So make sure you're asking them about what they've done to take care of these needs. You'd be surprised how many people have done nothing, and you'd be surprised how many people have done something, but it might not be the right something, and you'll be able to help them out. So what exactly is long-term care, right? Well, when you look at it, you really have two forms. You have informal and you have formal, okay? And it's assistance for when you're unable to perform some of what's known as the activities of daily living. So generally, whatever type of long-term care you have, to satisfy or to qualify for it, you need to be unable to perform 2 of 6 ADLs. So you look at this in regard to informal methods of care, that's stuff like, the family, friends, members of the community, right? Maybe the church helps out. Maybe local charity organizations help out, like Meals on Wheels, to get stuff over to folks. These are things that happen where sometimes people, maybe they could qualify for care, but they don't need to be in a nursing home and they don't need a nurse at their house full time, right? So this is stuff that happens. And I want to make sure that you fully understand. The big one to me is when we look at this one right here, family, okay? Here's what happens. A lot of time, and you might hear me double up on this stuff, but a lot of time it's the oldest daughter or daughter-in-law that ends up taking care of people. And if this oldest daughter or daughter-in-law is still in her working years and she has to leave work early to go see mom and dad and make sure pills are being taken or make sure everybody's able to get dressed or make sure they're getting up and getting where they got to go, you know what? We're missing time at work, right? Now this is a double impact. It's not only the cost on them that need the care, it's a cost on the fact that some people now are missing work. Now they're having less money go into their own retirement plans. They're making less money, right? They're getting stressed out and doing things. But look, we got our formal methods too, right? Assisted living, nursing homes, qualified in-home care, adult daycare. The thing is it's you don't know what's going to happen. What we do know is the numbers say 2 out of 3 people that are 65 today will have some form of need. Okay? You got to discuss this with your folks. So the activities of daily living, right? What are they? Well, in short, these are the things that we typically do every day, right? Sometimes as soon as we get out of bed, we tend to take these for granted. But most claims begin with the inability to perform 2 out of 6 ADLs. So let's say you wake up in the morning, you get out of bed, you took a shower. You've already performed 2 of these ADLs, right? Say you woke up and needed assistance getting out of bed, as simply as that, or assistance bathing yourself, or assistance in dressing yourself. These are the kind of things that we typically do every day that become harder to do without assistance as we get older. It's as simple as that, right? Dressing, eating, continence, transferring, toileting, bathing. But a lot of times it's the simple things where it starts, right? Getting up and getting moving, having your routine of brushing your teeth. You're older, you got to take certain pills, getting dressed, eating breakfast. Things like this, 2 of 6 ADLs, people are able to get the care, the help they need, and they can keep their dignity by doing it in home too. So why you should consider long-term care as part of the retirement strategy when you're talking to your clients, or quite frankly, any of you on this call today, if you're worried about yourself and you haven't done anything, think about that, right? There's a number of important reasons, but here's just a few, okay? The Department of Health and Human Services states that somebody turning 65 today has almost a 70% chance of needing some type of long-term care service and support. I can't speak for you, But honestly, I'd guess that the majority of people here on this call today want to live past the age of 65, right? So just think about that. Think about that. So if you make it past 65 and you unfortunately happen to be part of the 70% based upon claims with Genworth, right? They're one of the largest and most respected long-term care insurance providers in the industry. They really are. The average person will be on claim for 4.3 years if they live past the first year. Okay? Now, the big one, when you're looking here at the 4 to 8 years that I got, this is cognitive impairments, Alzheimer's, things of the such. These people tend to go in, get care, and they tend to be there for 4 to 8 years, yeah, and sometimes as long as up to 20 years. It's a debilitating and horrible disease, but it happens. And we want to make sure that people are able to be taken care of the right way with that. This is why you want to make sure your clients are aware of what their options are, right? And the first line of defense with this is for you guys to understand what's available and what these concerns are. So, right? Long-term care may be needed when you can't perform 2 of 6 ADLs, but there's other factors as well. Let's say that you fall, you have an accident, chronic illness like arthritis or back pain, strokes, or as we mentioned earlier, cognitive impairments. So when you plan for a potential long-term care need, it's like trying to drink from a fire hose, right? A lot of information out there. It can become overwhelming very quickly. So what you want to understand right here on the screen, I'm showing you a couple of questions to help begin the conversation, right? How can a long-term care need affect my family and my retirement strategy? Where should I consider receiving care? What could it potentially cost? What are my options for covering that cost? You know, these questions include how your family and retirement strategy can be affected by long-term care, right? I want you to picture something here. Picture that you don't take care of your long-term care need or that your client doesn't, okay? And they end up going into a nursing home. They get Alzheimer's, they go in there. I'm sure many of you understand what happens, and I'm going to just kind of fluff over the stuff. It's different state to state, and I know a lot of the numbers change year to year, but basically the stay-at-home spouse, the stay-at-home partner, they're going to keep $100,000, give or take, a home and a car. And a certain amount of the income. Other than that, everything else is going to be going to cover costs in the nursing home. And after that, then the state, county, or whatnot picks up the additional cost of the care. That's how it works in a nutshell, big picture, high level. The worry there is now, let's say this does happen to somebody that's 85 years old. We all know women tend to live longer. Now, that poor lady, she's stuck trying to live the rest of her life with the majority of their retirement nest egg gone, with what she planned on having as income gone. She's going to have to change her lifestyle. Do people really want that to happen to their spouse? Do you want that to happen to your clients? Make sure that you make them aware of these little nuances that really aren't too little, but how this affects everybody involved. So first and foremost, you need to consider who's going to be providing for your care, right? Who's going to do that? Some will choose informal care like friends and family. However, that care may need to be formal from day one, right? And if that's the case, who's going to oversee the process of beginning your care? Choosing a facility or service. These are questions that are best addressed in advance rather than at the time of need. Have you decided a potential portfolio asset or insurance policy specifically to address the cost of long-term care? Have you done that? Has your client done that? If you've chosen to use an asset, there are things to discuss with your financial or tax professional. I understand I'm talking to a bunch of professionals today, but these are the things that you're going to say to your clients, right? It's what you're going to ask and talk to them about. Is the asset that they choose to use, right? Is that earmarked today for retirement, but they might end up having to use it towards that? Is it subject to taxation? What's the net amount after taxes when determining that, if it's going to be enough to cover the cost of long-term care or what you need to have covered, right? These are questions that need to be looked at. And this is where all of you on here could drum up or come up with new ways of helping your clients and making sure that they're fully taken care of. Remember when I said learning about long-term care is like drinking from a fire hose? Well, it's because there's so many ifs in finding a solution, right? That's why it's so important to have a written plan just in the event of a long-term care need. I say to each of you today on this call, make sure you do that. Make sure you consider that for your own family so you can understand how to discuss this with your clients. Who's going to give the care? Where's the care going to be giving? How long will the care be needed? What age will the care be needed, right? All of these things need to be thought of. What are the costs in your area, right? What does it cost to have somebody come in the home? What's the cost of an adult daycare, assisted living? What is that? Make sure you understand what these are. Public programs, right? Those are available. Medicare, Medicaid, you all probably know the true understanding of what it is that Medicare will cover and what it won't cover. A lot of people think that that's something that happens, right? They think that Medicare will cover it. I don't know what it exactly is, 10 days, 100 days, it's something like that, right? But we just said somebody lives past the first month or two in there, they're going to be in there for 4.3 years. If you're going to be self-funding, right, what do you got to do? You're going to dedicate a portion of your portfolio to those, to taking care of that. So now some of the money that you saved, you're not even able to use that in your retirement. So, gotten a whole bunch of information, right? But it really hasn't sunk in. So trust me when I say that it's a common feeling. There's a lot of information, but our goal is going to make it as simple as possible for you to absorb this information. Make sure you guys kind of have a good understanding of this, and Bernard will be able to help you out, answer any questions. We could help you out back here through Bernard with all of that, but you want to make sure your clients fully understand the concern or what the possible problem is. So if we're going to run over a few examples of different ways in which you could cover the cost of long-term care, right? The first is how self-funding works. As you can see, we have our individual here, and unfortunately, this person is one of the 70% that requires long-term care. So where we pull those funds from to help cover the cost of it is up to the individual, right? Savings, money markets, investments, thing of the such, right? Annuities, IRAs, stocks, bonds, mutual funds. What if the time that you go to do this, your stocks and bonds are down? Real estate, what if you're thinking you're going to use that, but you can't sell it at that time? You're having a hard time getting that taken care of, right? So examples like this are precisely why it's so important to have your plan detailed out. Could be a situation where this person couldn't qualify for long-term care insurance or never attempted to purchase it before they needed long-term care. Either scenario, the decision, right, isn't just where they should receive the care, but what assets they're going to use in order to cover the cost. If you continue on, a lot of people rely on informal care, right? They rely on trusted individuals, friendly people, their family, their friends, people of the such, the community where, their church or what it could be. So when considering this, it's important to think of the availability of that. Like I keep saying, are they financially going to be able to have the money to cover all of this stuff? And when it's family, which is a big portion of who takes care of it, right? The majority of the time, it's the oldest daughter or daughter-in-law that takes care of these people. Are those people now going to have to leave work early? Are they going to be on time to help you out? Well, if you have a plan put in place with money to cover this stuff, maybe you don't have to have family, right? So what are some of the options, right? You look at long-term care insurance. You have traditional long-term care insurance, right? You have life insurance with an optional LTC rider. You have linked benefit products. So let's talk about these. Traditional long-term care, what is it going to do? It's going to allow you a lot of different options inside there of how you could design your plan. Traditional long-term care is in itself a reimbursement plan. You go, you get the care, you pay for the care, a bill gets submitted, they reimburse. Now, traditional long-term care is very much a use it or lose it option. You could be paying money for many years, pass away, never use it, money gone. Now, you had peace of mind, but that's a lot of money gone. You could look at a life insurance type program that has a long-term care rider, right? What you're doing differently here is you're essentially buying your bucket of money up front. You buy a $200,000 policy, you have $200,000 to cover long-term care services. You go into a nursing home, you got $200,000 to cover the cost. You have in-home care, you got $200,000 to cover the cost. If you pass away without using it, $200,000 pays out to your beneficiary. You don't lose it. And generally, there's a return of premium on there. If something changes, you could go ahead and get your money back. The same thing with linked benefit products. Okay? These are going to generally give you a larger long-term care benefit than they're going to give you a life insurance benefit. All right? The big thing on all of these is right here. Premiums are guaranteed not to increase. Where traditional long-term care, earlier I was talking to you about Genworth. I actually personally got family members with Genworth policies that have gotten increases upwards of 80%. This is tough on people. They get put on a fixed budget. One of the spouses passes away or something. They got this long-term care that they think is going to be there. Now all of a sudden they're getting 80% increases. Can they even continue to keep the policy? And return of premiums you can see there. So I kind of went through this already, right? Life insurance with the rider. If you require LTC, you got that there. If you pass away, you got your money here. Got your long-term care benefit. You got your death benefit. You got your return of premium. So what we have here is I'm going to go through it. I'm going to talk to you real quick about what the next steps are. And I want you guys to understand this is how you need to talk to your clients. You need to discuss with them what the problems are, what the risks are by not having a long-term care strategy put together. By not having that strategy funded, they're even at a bigger risk. Okay? So make sure that you understand the best way to fund your strategy. Okay? Understand what the solution should be. And understand this, when we talk about long-term care, we talk about long-term life insurance with the long-term care rider, we talk about the accelerated or the linked benefit plans. There is one other option available too. And this is where I know you all got to hear my voice today, but we also have a gentleman by the name of Chris DeMars on the call right now that's going to give you an option for those of you that run into a client that might not be able to qualify. Okay. Maybe they just don't like the idea of what you're talking to them about when it comes to long-term care, life insurance with long-term care or linked benefits. So what I'm going to do in ending here on my side is just make sure you understand what some of the risks are. Make sure you bring up this topic with your clients and make it easy. Ask them why they have not thought about it, taken care of it, or put a strategy together. That's all I ask of you. Chris, I'll pass it off to you now.
Awesome. Thank you so much, Chris. As he had said, my name is Chris DeMars. I'm the Vice President of Annuity Sales here with True Choice, one of the Vice Presidents of Annuity Sales with True Choice. And as I realize, I'm the only thing keeping you probably from lunch right now, as I think most of you are out on the East Coast. So I'm going to keep this pretty short, sweet, and high level. And what I would ask of you is that, as a scenario comes across your desk or you think you might have something there, just reach out to Bernard, and then we'll huddle up, Chris, Bernard, and myself, and try to support you and whatever the plan calls for. But as Chris mentioned, that sometimes either because of health reasons, someone may not qualify for the life insurance or the long-term care or the life insurance with the long-term care rider, or even a lot of the quote-unquote linked benefits or asset-based hybrid policies that link usually whole life and long-term care that are fully underwritten. They may not qualify, again, due to health conditions. The couple of the products that I want to talk about first and foremost is another hybrid style policy. I'm going to try to share my screen here. It's with Global Atlantic. It's called the 4Care. And let's pull this up here.
Chris, is there something I need to do or
Nope.
Are you able to get in there and do it? Okay.
I think everybody should see that now. So here is the 4Care. So the reason why I bring this up is, as I mentioned, it is a hybrid contract. However, it doesn't go through it's not fully underwritten. So whether you had a client who maybe didn't pass underwriting with another carrier that does fully underwrite these policies, or maybe they tried to go for the life insurance or even the long-term care standalone policies, and got disqualified due to health conditions. I've seen and personally have worked on a handful of cases, particularly with Pac Life, where a couple of clients got declined at Pac Life on their hybrid life insurance long-term care policy, but then applied here and
You guys hear me? Can you hear me, Bernard?
Yeah.
Okay, cool. So what happens here is that there's 10 qualifying questions, and that's the simplified underwriting. The underwriting's done on the application. So whether you had a client that didn't qualify, or maybe you have clients that simply don't want to get poked and prodded, they don't want to go through the hassle of underwriting and whatnot. I've worked with many financial professionals that was the case as well. So here's the solution. It's 10 questions. If they answer no to the first 5, they get double the benefit. So again, being asset-based, they're going to put in a chunk of money. So the minimum premium, as you can see on the screen here, is $35,000. That's the minimum to start a policy. You can go all the way up to $400,000 for a single, and then up to $600,000 for a joint contract. We'll call it maybe a husband and wife. So what that means is if they answer no on the first 5 questions of the simplified underwriting form, they'll get for sure double the benefit. So if they put $100,000 in, they'll have $200,000 pool of money that they can use for any qualified long-term care, care or nursing home care. Okay. If they answer no to the next 5 questions, questions 6 through 10, then they'll get triple the benefit. So on that same $100,000, they would have a $300,000 pool of money to use towards qualified care. Now, what's really unique about this, they only take non-qualified assets, but if you do have clients that may have some pretty serious capital appreciation on a non-qualified asset, they can safeguard those taxes by putting that money in here. So meaning, let's say you had a qualified asset or a non-qualified asset that had, $50,000 was the cost basis, and now it's worth 200,000. So you have 150,000 of appreciation. Well, you'd have to pay taxes on that when you start pulling it out. Well, if you put that 200,000 and you do a 1035 exchange into this policy and use every single penny of the benefit towards qualified long-term care, then you don't pay taxes on any of it. So it's a pretty great, it's an awesome with some pretty high appreciation and don't want to pay taxes on it. Here's a way to do that. Going through some of the other things here, that's pretty much all I want to talk about on this one. Again, if you do have a particular client in mind who may have some health conditions or doesn't want to go through the underwriting and get poked and prodded, this is a great solution. The other solution I want to talk about, and I'm going to stick with Global Atlantic because there's options that are called income doublers that are on annuities. So on an annuity chassis, you do not have to do any underwriting whatsoever. There's no simplified underwriting. There's no questions you have to ask about your health. None of that stuff. This is going to be pretty straightforward. Now, you're not going to create as much leverage inside an annuity policy because an annuity was designed for other reasons. But there are some companies out there, Global Atlantic being one of them, that does provide what we call in the industry a long-term care doubler. It's usually called an income enhancement. And so what that means is that if you, I'll just stick with this particular policy. In this one here, it is called the Income 150 SE. And right away, I'm just going to go to the good stuff. Or as soon as you open up a policy, as you can see here in the middle of the screen, day one, you get a 20% premium. So if you put $100,000 in, day one, your withdrawal base value, so the income rider value, has $120,000 in. If they do not exercise their right to take income in the first year, and they wait till year 2, then they're going to get another 7.5% bonus. Same goes for 3 if they defer 3 years, 4, 5, you get the idea. So they're going to get a 50% all-in bonus to the income account, the withdrawal base. This policy has the income enhanced benefit, quote unquote, the LTC doubler. So what it does is when you have a client who can't perform 206 ADLs and has to go to some kind of nursing home facility, and they're there for 90 consecutive days, what they can do is exercise this benefit and start their income. And what that happens with their income is their income actually doubles. So based on their age and what their payout factor would be, let's say if they're supposed to receive $10,000 a year in income for the rest of their life, because this is an income rider benefit, that income will double for 5 years. So they'll get $20,000 to help pay for those long-term care expenses for 5 years. And then after the 5 years, it'll go back to the $10,000 for the remaining part of their life. So again, you're not going to create a ton of leverage in this, but it's a solution that for those clients who may not have any benefits, or maybe they do have some benefits and they're just looking to add to it, because long-term care isn't cheap. I'm sure Chris covered some of the numbers. I know personally, we're looking at nursing home options in the state of Minnesota for my mom, and it's $9,000 a month. So it's $108,000 a year for any type of nursing home facility. At least in Minnesota. I'm sure they're probably pretty relevant or pretty similar to that in Michigan. But so hopefully something like this here, the Global Atlantic 150 SE, that's an annuity, but with that benefit, hopefully they can kind of lessen the burden of what cost would be in there in Michigan or wherever you're at. So with that, I'm going to leave it at that. Those are the two solutions that you have outside of your long-term care standalone policies, your life insurance with the long-term care riders, and even some of the hybrid asset-based options that Chris mentioned. So with that, I'm going to turn it over back to Bernard.
Thank you, Chris and Chris. I really appreciate it. Here at Insurance Advisors Direct, like I say, we're not just that Medicare focused company. We offer the full spectrum of financial products outside of the equity side. And me personally, I believe in the holistic approach. We have Medicare, and we're going to have all options for the seniors, be it long-term care, retirement solutions, guaranteed income for life, tax diversification strategies. We provide the full gamut that will definitely help you and your clients. So one of the questions is, will we be able to have to get slides of this presentation? As a matter of fact, yes. This presentation is client friendly. You can use this presentation with as a seminar or with your individual clients. So you will definitely get a copy of this presentation for your use. Secondly, reach out to your client. Reach out to your clients. Say about 5 to 10 of your clients that you know will benefit from one of these options for long-term care. We'll provide you with the form that you'll be able to gather as much information as possible. You bring that back to me, and Chris, myself, and the other Chris will get together and provide the best solution for that fits your client's needs. Then outside of that, we're going to have a few incentives for you, but I'll get that to you at a later date, which will be actually big. Then I'd like to also note next week, Chris DeMars and Chris Scheifer, again, we're going to host a webinar talking about retirement planning for yourself. A lot of times we're just like doctors. Doctors, they're not the best patients, and something that need a little boost. So we're here to offer you retirement plans. And we're going to talk about SEP IRAs and other tax diversification strategies. And like I say, both these guys are our strategic partners, and they work more on the advanced sides of annuities and life. And we're going to get you together. So folks, if there are any other questions for us, we can get those in. Let's see. So yeah, it looked like that was the only question about the slide. Yep, like I said, everyone will get a copy of the slide. Chris and Chris, you guys have any other final thoughts?
I'm okay here. Anybody needs anything, let me know. Okay, we could get examples out, show different ideas, but just like you said, Bernard, if everybody could go out there and start thinking 5 or 10 people, and let's work it together, help some folks, and help your pocketbook.
Yeah.
Yeah, well said. I have nothing else to contribute. And, as you talk to those clients and you're thinking there's an opportunity there, get the details. Bernard had outlined that there's a sheet that he'll be sending out to everybody. Once those details start coming in, we can start helping you put together plans for your clients.
All right. Well, again, Chris and Chris, thank you. Again, folks, I thank you for joining in. I'm going to reaching out to everyone on this call just to see how we can assist you. And then, like I said, get that presentation on over to you. So again, Happy New Year. Have a great year. Insurance Advisors Direct is 100%, actually 1000% behind you. We're here to simplify your success, and we're going to do it by any means necessary. So folks, have a great weekend, and we will see you next week. Bye.
Thanks. Bye.
Bye.